Welcome guys, it's the Crypto Sniper. Yes, and we did part one yesterday that was surrounding the Bitcoin dominance. So in that previous video, we said Bitcoin dominance is actually beginning a sustained period of loss. In other words, the market cap significance of Bitcoin is going to reduce relative to everything else to such a degree that it'll fall from its current levels of around 55% to below 20%. And we have a target for around 21, and typically these are overshot. Does that actually mean that Bitcoin can only go down over that 3-year, 4-year outlook period that is probably going to transpire next for crypto? And the answer is no. Does that mean the 145K possible target can't happen? That also doesn't mean necessarily that it's not going to be able to still, over that period, do 145K. But the market cap might have grown so large, and other coins have done far more than that Bitcoin's dominance can go down and still can go up in dollar terms price. In other words, the whole pie could get a whole bunch better. So it's not an ultimate provocation that Bitcoin will die. It doesn't mean that has to happen. That's a very small slice of possibility, and it exists for all tokens. It exists for the dollar and many other things. So people feel sometimes that I'm specifically trying to provoke Bitcoin holders. No, not at all. And in fact, I've traded and held Bitcoin quite some bit during the times, and have treated it in the early stages as the benchmark. In other words, don't get into an alt unless it's going to beat Bitcoin, because Bitcoin was more stable, although that's a relative term, etc., than those new alts. However, as it's getting a more mature market more quickly, and we're getting to a point where Bitcoin could go to 20% or below of dominance, what's going to be happening to the rest of the pie, and what is Bitcoin going to be doing? Does it necessarily mean it has to go down in dollar terms? My overall opinion is currency is being killed, and I don't see it necessarily going down in dollar terms in the long run. But we're more interested, so that's sort of a 3 and 4 year outlook. But I also gave a current here in the now part that is, even in that level, we see the Bitcoin dominance actually decreasing. Just to make that third high, and then the pullback, the pause, it'll have a little bit of a rally of strength, and then that much more brisk move. Let's draw it. Let's hit the charts and redraw it just as your reminder, because you watched it yesterday. So here's a scenario cast I've done for the Bitcoin dominance, as part 2 in this series of technical observations and potential thoughts, where we model possible outcomes so that we can be in the best position, in the best tokens that are going to deliver the highest capital appreciation for you during whatever bull market nature we have. So you can see in the immediate realm, we are talking about Bitcoin losing quite a substantial dominance. I pointed out how brisk these moves were by virtue of their move once the relative low one here, the base plating out, was finished. And of course this move over here, that was part and parcel of the bull market of 2022. So we're expecting it to be impulsive and very strongly up again. Only it's going to be shorter, not quite as long as these, and it'll bring us up to and around, I would imagine, the 40% level. Thereafter, there will be some pullback, and there'll be again a bit of a flow back of currency back into the Bitcoin market. So if that's going to be taking place, then everyone will come back and say you're wrong. Remember, we're going to get one strong leg fairly. It's literally starting right now, in my opinion. Super squeezy Japanese, very, very tight in that falling wedge, and I feel that's already been broken, and we've already been dealing with it beforehand on how it's likely to play out. So you're going to see a situation where Bitcoin's performance is going to underperform to the likes of the other alt majors. So some people say in the comments, well, I'll never take and then they use a shitcoin or some other phrase. What you've got to remember now is that I'm typically talking about the coins that are going to eat market cap from Bitcoin are already fairly sizable projects. These are projects that are in the top 25 that are going to start decaying, and they're in the top 10 primarily. So, if you were to have a major surge in XRP because it's starting to be used by the banking cartel for their particular CBDCs, and those things are coming to play, that would be an example of one token gobbling up a large amount of market cap that already has a reasonable market cap and is known to you. I'm seeing ADA dominance. So generally, I've criticized ADA during this performance. I'm seeing it bottoming out against Bitcoin as well. So the couple of prospects that are moving, we've got Tron, ADA, we've got potentially TON, we've got BNB. None of these are small cap projects. TON is a bit of a recent star, but most of the others have existed for quite a few cycles and are now in their third, fourth year, and they're starting to make real headway in the tech development. And of course, Ethereum, which we're going to be talking about as well in here. So overall, the positioning and my news is actually that Bitcoin is not currently the hold for the upside. So what do we then expect after this is broken? Quite a quick move, pullback on the second interim, and then target run with a small overshoot, and then you could get that occurring. So that's our projection for it. In the near term, there's going to be a loss of relative performance by Bitcoin, and then in the longer term, quite substantially. But in between that, there will be a likely pullback and pause period, which I can't tell you how long that may be. So this is scenario casting. That's what we did in the previous video. Do you understand? In this particular discussion, we are potentially also predicting a flippening, and it could be not only one, but if you're to fall to 20% market cap, you could actually find yourself where there's maybe one or more tokens that have a larger number than 20% in total market cap contribution. Now, nobody talks about flippening anymore. It's a phrase that I haven't heard in ages, and we're putting it back on the table. And again, it's not tomorrow, it's not next week, it's not next month. It's the part of this process that will see a market cap dominance that's at 55 falling to 20 or potentially below that, and other things will grow, and the eating up of that pie of the dominance is going to come from big, established, well-backed projects. It's not coming from, in the general, there could be some really new entry that super surges, etc., but it's going to be the likes of Sol, ADA, TON, XRP, BNB, and Ethereum potentially, and also Tron or others that are in the top 15 could be doing quite well. Okay, so what are we going to talk about is why, and I'm only going to do this for one token, and if you want to find out more and see how we are going to model this and continue to model this to position you in the best mover in the future ongoing and the recommencements of the bull market, if we are to have a demand destroying event, how by cross trading, even if the market goes down, you could be making money overall in the market cap, then you will value this video. Okay, so we're going to cover Ethereum as the primary one. It's also the second by market cap. It's the one that most people referred to when they referred to a flippening event. So let's go straight over and talk about Ethereum dominance. So that was Bitcoin dominance. We're saying goodbye to that chart. That was where we left you on the last video. So the Ethereum dominance situation. And in fact, I'm going to revert this to normal way around. Just to give you back your head. It's kind of confusing looking at charts upside down, but I certainly encourage it in terms of your development to avoid bull biases on markets that only see things to the upside. So what are we on here? We're on the monthly. Let's drop it down to the weekly side. I'm going to let some of these indicators go just to reduce the busyness of it all. We're going to take the volume off, and we'll take. Let's also switch off the lights with all my TA that is on here. So this is Ethereum dominance. Now, we've made this case and video a number of times before, actually. This is not the first time we'll be discussing Ethereum dominance. We regularly check in with it, and we've been waiting and watching. In fact, we've gone so far as to say that Ethereum is going to play a major role. It's not a popular opinion anymore, because most people are seeing Ethereum as being a bit statist. And a little bit kooky, and also, of course, the high fees and all of that story. Many people have looked to a new champion. However, I do feel that this one that has come out really early, that has had a lot of development going on, is going to play a role in your new financial society. We've heard about homes being registered. I keep mentioning this, I'm never letting it go. It's going to be the loss of your sovereignty on the blockchain, and that ETH could be behind that, and then you're going to have to state your valuation, and if you understate, somebody can automatically make an instant purchase online, and we're all too focused on owning things, and look at Airbnb, they don't own property, and Uber doesn't own cars, and all of this clever voodoo mind trick to help separate you from your assets, which is the great risk of tokenization that incites the likes of Larry Fink immensely, because he's looking forward to owning everything and you nothing. But that's a little reset clip aside. Let's talk about the role Ethereum's going to do. If there's money to be made about it and you can't stop it, you may as well make the upside out of it. And this is Ethereum dominance. I'm going to switch on the lines and the lights again so that you can see that. And let's just take that box off for now. So we've actually made a number of calls that have involved Ethereum dominance. We did a head and shoulder call over here with this gray inversion right there. The subsequent head over there, and then the right shoulder over there with the neckline, and we said at some point you're going to get back up to the 20% level, which was attained. That head and shoulder did perform. You made the right shoulder here, you began the break there, and we said go, 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 it's going to be Ethereum all the way, only for it to reverse and everyone to get real angry with us. And then it had another little smaller time frame head and shoulder where it once again set off. So things can break, they can pull back, and then they can go again. This is the nature of things, and that's exactly what happened, and the target was in fact made. And if you had put your stop where it should be, under the right shoulder, you wouldn't have been concerned, although it would have just taken a bit longer than you expected. However, once it got going, it went real fast, real quickly. Now, here's some of the interesting dynamics that we've also put forward in all of this, and that is to highlight other technical structures. Let's go to the log scale that exist inside of this pattern. Now, the first and foremost one that is more relevant for the here and now is in fact this particular structure that is a squeezing, drawn with the pink, potential upside HVF that will generate quite an attractive target for us, that will see the likes of Ethereum moving from around 18% to the better part of 28, just to make this particular structure's target. We'll redraw that, by the way, and harden that up, but it's a guide in and around the 28 to 30 zone. Now that's already quite an advancement in terms of market cap. It would be around 10%, which would be a doubling, near doubling, by relative performance to everybody else, regardless of whether it's a bull market and everything else is going up as well. Also, on a really macro basis, which could refer to the longer term out period where Bitcoin dominance falls below the 20%, there is a technical structure of significance, and I'm going to draw it in the blue. I'll go fat cokey so it really pops. We had a super steep shoulder over here at a neckline around there, that is the 20% mark, which we have basically found as resistance here for quite an extended period. You know, you're looking at 2021, we're 2024 today, and we've not been able to hold above 20% for an extended period. This has led to this holding, winding up HVF in ETH dominance to the upside in our view. And if we have a look at this, that would be a right shoulder, and then the entire period below the 20% neckline over here is a complex head. Now you might say that's a bit of a funny old head and shoulder, Francis. We deal with that in complexity. You have high volatility and steepness to the downside over here, and you have flatter, longer duration calming, which is a sign of a maturing market, on the right shoulder. And then of course you have the capitulation that occurred that ran right down into there, and then the rebound that we've already covered in our previous technical calls on Ethereum over the many years that we've been covering crypto now. So what does this mean? Let's have a look at this right shoulder. So I'm going to lose the big picture, but before leaving it entirely, we actually have a set of circumstances where Ethereum could become, in the most extremist case, 56 and 34% large. Now, you would say that's almost a flippening completely of the percents, because Ethereum's at around 18, and we're saying Bitcoin to below 20, and Bitcoin's around 55. So that's kind of almost like a tit for tat. Now, remember, technical patterns, they take a long time to occur and can fail. So that's not a hard prediction, but it is a possible outcome with a small slice of probability. I wouldn't put it in the 50% right now, but if this first component, which is the right shoulder, which we're going to now focus on as we drop down the time frames to around 2 to 3 days. Let's do that and focus on that. If that one comes to fruition, you will have then seen a few more shoes drop towards this triggering of this larger structure. So here we are. Where does this go? Well, we saw a sudden livening up of Ethereum versus other tokens recently when there was a bit of ETF activity, and those were getting called out and brought to the fore. You'll notice that we do tend to get a little bit convex and a little bit choppy when we're in these upper areas around here. We call this sort of the muffin topping. This has been the range of resistance. And now we're getting a little bit of volatility and bounce up back ability typed along the lows here as well. You could, inside all of this, also be getting, let's wipe the face clean again, you could, inside of all of this, getting a smaller structure as well of some form of reversal, as we seem to be running into slightly heavy traffic as we start approaching 19 each time, here and here again. So there you go, boom, very strongly up to here, and maybe a little bit of a right shoulder occurring during this period, which could be another pattern that is indicating to potential upside for this entire structure, all within the upside HVF that we are forecasting here for Ethereum dominance generally. That's going to take it through this 20% level and substantially beyond, and that is something it hasn't done in a very long time. That's it. So what about having a look at the smaller piece of price behavior? Well, what would the trade be? The trade, if ETH is going to go up and Bitcoin dominance is going to go down, invariably, to protect you from a demand-destroying event where both could be going down, just one less so than the other. If Bitcoin dominance is to be largely shed eventually, and you could have a set of circumstances where Bitcoin could be doing that. That's your BTC. And Ethereum could be doing this, also going down, maybe just less so. You want to still be fully hedged and even making a bit of money in that environment on the basis that your Bitcoin dominance call is accurate, if that's to be true. And it will be true generally, but remember there will be a pullback period. We're going to lose fairly briskly, I feel, Bitcoin value to relative to the others. But then there will be a pullback period where they won't hold and could be reverted. So please understand, it's the general rule of general direction, but it's not universally true every single day, hour, and even week. So in the event that this is occurring, you don't want to be trading against the dollar, because you would be losing money on the ETHUSD during that period, and a demand-destroying event could in fact see quite a substantial correction. So what you really want to do is to trade ETH versus BTC, potentially. This is not advisory, this is just me thinking out aloud. By the way, there's other alts that could even further perform, but my overall view is that ETH will be more consistent and less volatile. There will be others, though, as in the top 10 that I've already mentioned, that are all showing tendencies to outperform. And we've mentioned ADA.DOM also being an interesting chart. I don't intend to cover that here. We do that inside our community. We don't have trading metamorphosis programs anymore for you, but you can catch up by hitting the first link below and doing our self-study. You will see it in our Sunday sessions and on my live trading days that you'll be a part for 6 months and at a substantially reduced cost. So you can put your name down, of course, for the waiting list for when we do TMPs again. Okay, so good. By the way, you'll be able to upgrade if you take the self-study at a later point when we make the Trading Metamorphosis program available again. So let's have a look at this, because I brought this diagram back up. I introduced it last time. There's a lot of combinations and permutations that could see Bitcoin dominance go down. Obviously, the most comfortable one for all of us is a super alt run. That's everything to the right of the blue line, the first blue line, and in between the two that I've now drawn. A moderately firm alt run, all of those are good. You'll do just grand against the dollar in that environment, and Bitcoin could be moderately up or chopping around and not going down. That's the most comfortable environment for everyone, and that doesn't provoke the Bitcoin maxis. And at the same time, within that, Bitcoin can still make its 145 over an extended period if we get proliferation again following a demand-destroying event. But what could happen sooner, by the way, data in today that had a substantial effect on the USD JPY. CPI numbers coming under, a big undershoot on the consumer price index numbers. So with those numbers coming in substantially under, what does that mean? Well, it took a lot of steam out of the dollar. So we're getting a softening dollar. A softening dollar could help Bitcoin slow down in its overall potential loss of value on that W head, inverted head and shoulders that we covered in the previous video. Watch part 1 if you're just seeing this. But the thing to protect yourself against is, hold on, if CPI is going down, that tells me that the economy is weak, consumers are weak, retail is weak, etc. We could in fact have job losses coming next, job cuts, earnings drop in the stock market, and the stock market start to come off. You could have a whole, little bit of an economic recession being acknowledged, and that could bring a lot of heat to the overall crypto market. So to protect you from this zone between these two double lines that I'm just drawing over here, which is either a chopping market or a mildly down market or a strongly down market in either Bitcoin or Ethereum, the safest thing to do is to do the cross trade. So that could have a situation where ETH is even down on the day, but you're making money because it's down less than Bitcoin. Don't forget, with the institutionalization of money, if you get forced sellers even in the institutions, that could be a lot of money that needs to unwind. And certainly with maxis, we've seen a lot of long-term wallets actually moving money to Bitcoin to exchanges. And that's a concern, a 5 to 7. There's a lot of insiders that might have heads up of certain things coming. Who knows? So some of that Bitcoin dominance, that could be coming soon. That loss in Bitcoin dominance, as I already showed in the expected upward leg, that could be pretty strong. So in that situation, the trade would be ETH-BTC, or the other alts, which we've covered and highlighting inside our community, which you can find out more. So to leave ETH-DOM, we're going to pivot to ETH-BTC on the same time frame, and you will see that we are here. Now the structure against BTC, as opposed to just general market cap, is not an HVF, it's a falling wedge, which is the cousin and sister to the Hunt volatility funnel setup. However, on a smaller time frame, you might notice that we are leaning up on a fractal against the capping descending grind line, which is in red, which is the one we expect to have broken to the upside, especially after that impulsive move across the falling wedge. So what do we actually look? That's a 3-dayer. Let's even run it down to about 4 hours and pull it over, and this is what you're actually seeing. This is what you're actually seeing over here. And on the pair that you would trade, you are actually seeing the possibility of another, on a smaller time frame, HVF. However, there is a bit of a rising wedge over there. You want to be careful. You don't want to always enter at market. So you could be making a third high in the process, or moving towards making a third high. But in that process, you might get a bit of a breakdown that could see limit orders rewarded on the ETH-BTC pair trade on the upside HVF potential that is here. That is what I'm here to tell you. This is what I'm covering. By the way, I'm doing this for all the alts, and there may be others that are likely to outperform even Ethereum against Bitcoin. Who knows? You want to find out what we think, click below. However, for everyone here watching, and as a free offer for you to contemplate and consider, remember, non-advisory, this is me talking about how I might trade the markets and my observations. This could represent a breakout coming that can still be bought cheap. It hasn't happened yet, and then you would have a situation where you would have a likely upside HVF, and we can model that for you. We're kind. We're going to do our best to give you our best idea, and as I say, we do this to a far greater degree inside the community when that option is available again. I will do that as the low, so ETH-BTC, and do a little bit of twiddling with the tool. So this would be 4th inflection point, boom, boom, bosh, and let it do a draw for us. I think we'd be around 60, a little bit of adjustment. So an example of an upside target here. Let's just see, pop. Would see you around, and you can see that 0.061 roughly up there. So you would see, and by the way, you're coming out of a falling wedge. We would expect this is just a small fractal that needs to break the capping descending grind line that is in red on that falling wedge. So I would hold this. This is not a situation where I would close on target, because this is a fractal inside a series of moves that are likely to run for a lot longer. So target is almost less important here, but you could expect some degree of pullback at that event. So here you go. That's your upside HVF. That's where you would probably have some small pullback, but I would expect further upside on an ongoing basis as we move back up the time frame. So remember, we've dropped to a 4-hour to discuss a small fractal against FBTC on much bigger time frames where we are expecting Bitcoin dominance to subside, and on much bigger time frames where we are expecting ETH dominance to actually climb. So that summary again: big time frames, Bitcoin dominance down, ETH dominance up, FBTC small fractal in a falling wedge, making a 4-hourly upside HVF for a break out of the falling wedge on FBTC, not discussing dominance right now, that leads to the beginning of a move that could be far longer to the upside. Okay, hope that's useful for you. We've done the choice between Bitcoin and over the short and even the long term, I would choose Ethereum over Bitcoin. Okay. Lots in there for you to enjoy. Don't forget, hit the first link below if you want more of this kind of analysis on an ongoing daily basis as we serve both our self-studies and our community members. For when the TMP is available again, there's a waiting list there. And on the self-studies, you can get up on the theory. You can see us on the weekends for our Sunday sessions and get all the live trading days with me for the better part of 6 months, and everything recorded as well. Okay, till next time, catch you later. Bye for now.